What's going on, Apes Ape Army? All of my beautiful people, yes, I am talking about you. You should feel very excited today. You should be ecstatic, jumping up and down and cheering hallelujah. Why? Because markets are down yet again. And we are seeing very worrisome signs in the broad markets that the markets are about to go through a substantial correction into a bear market. But don't get lost in the sauce here. The markets coming down is restricting liquidity, which brings us closer to the MOAS. So it's like AMC is going to correlate the markets. It's going to come down in the short term, but that's the only time that we can possibly see the MOAS, when liquidity is scarce. And that's the beautiful thing about it. And a matter of fact, I panicked today. Sorry guys, I panicked and bought the dip. I bought the shit out of the dip. And that's exactly, I mean, I'm not a financial advisor, but I think that's what a lot of people ought to be doing if they are down substantially. You know, my average is in the mid 30s. I'm down quite substantially. So I panicked, bought the dip. What can I say? Hey, but let me introduce you guys to a great quote that yours truly made up. You must get through the tornado first to see the rainbow, then follow the rainbow to the pot of gold. I think that speaks volumes here. I think that's what we're going through. A tornado, fucking thunderstorm. All hell is raining down. We got golf ball size hail hitting us in the head and shit. But eventually we'll see the rainbow, and we will follow that motherfucker all the way to the leprechaun, all the way to the pot of gold. At least I will. So that's the intro I'm going to give you guys. Hit the like button. Consider subscribing to the channel. Let me know in the comment section. Are you buying? Are you fearful? Are you happy? Are you excited? Are you doing jumping jacks, jumping off the wall? Let me know. Let me know how you guys are feeling. As always, if I do not respond to your comments in the comment section, we do have a nightly live stream where I answer all of the questions you guys have, whether it's about real estate, rental property, stocks, the market, trading, whatever it is, crypto. Come ask your questions. That is free 99. We don't ask for anything, but maybe a like button every now and again. And most of the time we don't even ask for that. So that is just to reiterate, so everybody knows, that is Sunday night through Thursday night. So the only nights we do not do that is Friday and Saturday, because we don't have trading the next day. So that's it. Let's dive straight into this video. So the markets are down quite substantially. The S&P down 0.28% right now. It's very volatile. The NASDAQ is pretty much down about the same, down a quarter, S&P down a quarter. Dow Jones, and this is what is pretty alarming if you're an investor in other stocks, not just AMC. The Dow Jones, your rush to safety, is down 0.5%. And we're not seeing strong fundamentals here to support the NASDAQ actually rallying. We're looking at the Fed tightening. We're seeing high inflation. Even some analysts, a lot of analysts, are starting to call for the Fed at this meeting just next week, January 25th and 26th, to raise the interest rates 0.5%, to scare the markets into a bear market, to cool down inflation expectations. So that's really speculative, but if that happens, all hell is going to break loose in the marketplace. As you guys do know, 36% or more of NASDAQ stocks are down over 50%. That has never happened in history. Why? Why are the markets propped up on weak stilts? Because all of the money has flown or just went into Apple, Facebook, Microsoft, Nvidia, Tesla, Google, Amazon. You guys get the idea. I sound like a broken record if you guys watch these videos every single day. But that's how the MOAS is going to be created. So I think it's very important that everybody fully understands this. There's going to be pain in the near term, but once really Apple goes, which controls 12% of the market alone, that's when you're going to see shit hit the fan. And any small catalyst, like super small catalyst, could send AMC flying. As far as other things that are going on in the markets today, we do have Biden that is speaking after the bell, basically answering questions, which is pretty rare, and he may or may not drop some news on the markets that they're not going to like, including the Russia-Ukraine situation. That's not going to probably be a positive thing for the markets. Other things as well could be said. As far as earnings, which is really the big thing investors are paying attention to, Netflix has their earnings tomorrow after the bell as well. So that's going to be your first big tech stock that is going to be reporting earnings. Netflix pretty much always misses earnings, but not by a substantial amount, and it's usually good and bad you can pull out of their reports. But if they see a really bad report, that is certainly going to send the markets down even more. But we don't get a lot of earnings until next week. You start to see Apple reporting, Facebook, all of the big companies, and that's really going to move the markets in one direction or the other. And then the Fed meeting, which is January 25th and the 26th, and then the day after that, the 27th, is Apple's earnings. So you're going to get a lot of catalysts next week, back to back to back, which is going to ultimately give us our big move. Give us that move down to bear, possibly a bear market, or give us a nice solid bounce from here. As far as the actual SPY, we did break under the 100-day moving average. This is not good for markets, and people are calling for possibly to come down to the 200-day moving average, which is at $441. So that's going to be a substantial drop. And it looks more likely than not, to be honest with you guys, at this moment in time, we need some kind of big correction, and that's what's going to cause the MOAS. So pretty exciting if you guys are looking at this in the same sense that I am. As far as the day today, AMC is at $18.72. We are about to wrap up trading here in just a few. We are down 0.69%, but we are hanging out at these bottom end ranges. I have had this line drawn for a while now at $18.50 per share. I said this is where I think the stock will ultimately find a bottom and then retrace back to the upside. Who knows if that will actually hold, but it looks like that is remaining true as far as right now. I do have this lower end line at about $17.50 per share as well. I don't think obviously a sell-off in the markets is going to keep us under $20 for all too long. So long story short, I do think most of the pain is already gone. We are riding the lower end range of the Bollinger Band, which is 2 standard deviations away from the price of the stock. We can see the bands are starting to widen, signaling you are seeing a lot of volatility right now. Obviously, if you've looked at your portfolio, lots of volatility. The MACD is going more bearish, so definitely not a good sign right there. As far as to the upside, if we do see earnings that are good, if everything starts to look okay and we start to make a move to the upside, $20 per share, that's going to be the first level. $23 per share is the next level, and then the really important level is the 20-day simple moving average at about $24.70 per share as of right now. So I think there's more pain in the near term until we ultimately do see the markets, sell off and AMC get that next leg of the MOAS when the short squeeze actually does come. As far as the ortex data, let's take a look at this. You're looking at 19.82% short interest of free float. This just keeps bouncing back all day. Earlier, it was like 20.5%. So who knows exactly what it is? Call it 20% short interest. Shares that are sold short of 101.69 million. Borrow change of negative 1.63 million. Share utilization of 75.93%. Days to cover 2.59 days to cover. So that is ticking up quite dramatically. And altogether, we're looking at a very bullish short squeeze case for AMC. I mean, I don't think you could ask for better numbers here, besides a cost to borrow being a little bit higher and maybe the share utilization being a little bit higher. But we don't need that. Doesn't really matter when it comes down to it. Short interest, days to cover, those are the most important things that matter when it comes to an actual short squeeze. Cost to borrow as well, but I don't think these cost to borrow numbers are correct. I think it's way more than 2% to borrow AMC stock and sell that short. So take that for what it is. As far as the Stonko tracker data, yeah, there's not going to be a gamma squeeze this week. I guess this is a good lesson for people to not buy options unless you actually do start to see a lot of bullish activity. And if you do, like I did just like 2 weeks ago, I bought a $35 call that was expiring this week or last week, and it expired worthless. Obviously, I didn't sell it. I just wrote it out because you only want to, invest or gamble, I should say, as much money as you are willing to lose, especially with AMC options, because that's exactly what's going to happen. A lot of options are going to expire worthless. We're sitting at about 1,000 options that are out of the money on the call side. In the money calls at 63,000. In the money puts at 151,000. Out of the money puts at 260,000. So it doesn't look like we're going to get a gamma squeeze. I'll be the first one to tell you that if you have not heard that yet. It looks like there will likely be more pain. We could see a bounce. I'm not saying it's impossible to see a bounce, maybe to $23 per share, $24 per share, but definitely not a full out gamma squeeze. So that's the situation on that. As far as the max pain and what that is doing, obviously by Friday, and that's sitting at $21 per share. So that does still signify a pretty decent rally by the end of the week, but it's going to come down to what the markets are doing. It's not going to come down to, just market makers wanting the stock to be at max pain. It's going to revolve around what the markets are doing. So that's basically it. That's basically all we have for this video. Hopefully you guys learned something, found some knowledge, or simply entertainment out of this video. If you did, hit that like button for me. Consider subscribing to the channel as well. If you guys want free stock in Public, Moomoo, and Webull, check those links out down below in the description of this video, as well as the link for the buy and sell alerts, as well as my Twitter account. If you guys want to go follow me over there and get all of my trades in real time, links for those down below in the pinned comment. So love and appreciate you guys. Thank you for watching. I will see you in the next one.